What is going on, fam? Happy Friday. Grab my computer. And just to realize it's not even Friday yet. It's going to be brutal. Let's get the computer going. Hang out, this is too high. What's going on, fam? Joining in early. Pleasure to have you. Sorry to get on for a little bit. I want to start getting on 30 minutes a day, no matter what, until I go snowboarding. All right, so what else did I need to do? Got this going. Oh no. Oh, I left my water. No. Yikes, I do not want to go back outside. It is so cold out there. All right, fam, so a lot to discuss. A lot that we've been going through, man. It's been an interesting freaking couple days. This week has just gone by so fast. And there's just so many things that are happening. It's actually unbelievable. I can't believe. So you've got all of these geopolitics happening right now, where you've got Venezuela going through a regime change. Clearly, you can call it whatever you want, but that is what it is. You've got what else do you got? So now with the things going on with Iran, there's a lot going on there, and there's some controversy where we don't know who exactly is telling the truth anymore. Gotta send this out. Okay, so yeah, anyways, so we've got the Iran conflict going on, which should be driving oil prices up, but because everyone is confident or whatever's going on that the oil will keep coming, then there's still just stock prices have not really done too much or moved too much. It's really strange to me. The price of silver. So guys, I know I've been preaching Hecla mining. If you guys did not get in, I am sorry, you missed out on some incredible growth. I mean, just look at that right now. Look at just that just today. I am now, dude, this is insane. I went all in this year for this one. This is gonna be my stock pick of the year. My market value in 700 shares, $17,640. That's how invested I am into Hecla. I've sold all these options. As you can see, what I do is I buy 100 shares and then I sell an option. So basically I have 7 options sold all over the place, ranging from $15, $20, $22, $21, $24, $17, and $19. I am all over the place, and each one I'm locking in like at least, I'm trying to lock in at least 10% gains. Minus the one that I sold that expires next month, I probably locked in 4 to 5% on that one in a matter of 2 weeks. That's insane. So, and now it jumped up to an all-time high, 25.20 today alone. So what I will do tomorrow, and this, for those of you watching, you're lucky, because this is what I'm going to be doing. And by the time that I even air this video out, you guys won't even, it'll be over. So the ones that are watching, this is what I'm going to be doing. So because Hecla is at $25, if it stays at $25 or above, tomorrow I'm going to buy 100 shares, and I will be selling the $25 call expiring January 17th of 2027. Let me make sure that date. January 15th of 2027. and I will lock in possibly a 30% gain if by 2027 Hecla is $25 or above. Pay attention to that alpha. If it stays at 25 or goes above and you sell that option, you're going to be able to lock in between 20 and maybe 35% gains. I saw it yesterday, and I locked in about 25% gains, about $1 below at $24 or $22 something. That's what it was, 20% at 22 when the price was at 24. So huge profits there still, but I want to go one step further, bring it up to 5% of my portfolio, and lock in that 25. That way it can stay at 25. If all of this silver is just a ruse or just another trend that's happening and then it'll correct itself later, then I will lock in at 25, 30%, which means I will take that out, and then it could drop 30% and I'll be at break even. Whatever that price is, I don't really care, because Hecla Mining pays a dividend, and I've already locked in so many returns, every dollar almost, all the way down to $15, that I'm good. I scooped up so much liquidity out of there that I'm excellent. That is a fantastic trade. I hope you've been watching my channel, because I've been preaching this since Hecla was at $17 just a short month ago. So congrats. Yes, for everyone that's on, please like and subscribe. That's why I'm getting on, so that I can make sure to get you guys, get to the road to 1,000, and then I'll start making long form content, horizontal. But I want to make sure that I have you guys' attention. And live is so much better, because like this Hecla Mining tip that I just looked at, what I'm going to be doing, only you guys are going to see it in time to actually be doing anything. By the next time that I go live, it's already happened. And then we don't know if it was right or wrong or etc. But if it was right, then you just missed out on a lot of, potentially 30% gains in a year. That's what, 3%, 2 to 3% per month on this trade. That's just, I'm happy. I'm happy with those trades. Keep making small ones like that, and road to a milli. Here we go. All right, Felix, what's going on, man? How's it going? Brasilero Mariana Figueredo. Or Maria, yeah, probably Mariane. Hoy soy brasilero. So is that Portuguese? That's awesome. Thank you for tuning in. Love to have Brazil in the channel. So if you haven't hit that subscribe button, make sure to hit it now, because I won't be on here. I'm going to make it my goal to be on here at least 15 minutes every day, 15 to 30 minutes every day, to keep the interactions going. I feel like the algorithm loves if you're just consistent. Even though I'm not the biggest fan of lives, when we're talking about stocks, this is actually a huge help for you guys. For those of you that are just tuning in, check this out. These are all the sales of the options that I've sold, so you don't think that I'm capping. Yeah, I'm just super excited. My average cost for this stock right now is only at $22, and think of all the liquidity that I squeezed out by selling the call options. In other news, I've got my top 20 stocks. Make sure to, if I get 5 likes on this, I'll show you what my top 20 stocks are before I make the video, so that you guys get it first before I release it to the public. I've actually got 21 in there right now, which means I've got to remove one, but I'm not sure which one to remove. There's so many. They're just all good, but if you want to have a proper balanced portfolio the way that I preach it, then you want to, the max is 20 positions, 5% each. That is my strategy. That is my strategy going on out, because that's what's worked so well. If you go into too many, it becomes very hard to track, very time consuming. And for those of you that want to keep a full-time job or want to do this as a side hustle, you want to follow this strategy. Once you get past 20, it just takes so much of your day just to review all of them. It gets very difficult. But all right, so I'm gonna let you in on some, just because I know that some of you are still watching despite no one hitting the like button. Okay, so this one is going to be my favorite, and I think this one's going to run, because I don't think that it has gotten the attention that it deserves, because it's being overshadowed by gold and silver. So This one is FCX. Put it in your tracker. Freeport McMoran. This one is a copper mine. And I think copper will have the biggest gain this year of the three precious metals that I just mentioned. And so I'm going to go in on this one. And also, this is crucial about my portfolio that you need to pay attention to, which is why I only do 20 and why I'm very selective of the stocks that I choose. And out of all the mistakes that I've made, this is how I got to this process. So learn from my mistakes. And this one has a dividend of 1%. Okay, so let's just say I am completely wrong about the gold, silver, and copper, or all of this is going to be corrected in the next couple months, right? Because right now it's at an all-time, it's just gone parabolic. But let's just say that Freeport Moran, what I'm going to do Friday, what's tomorrow? Oh, tomorrow's the big day. Tomorrow, all of my call options, 95% of my call options expire, which means I get to rebuy in either tomorrow or Monday, probably Monday. But I'm going to buy this. Let's just say right now it's at $60 a share. And this is some alpha for you. I'm going to buy this at $60 a share, buy 100 shares. So I will be investing $6,000. And then I will be selling the $60 call option on Monday. If right now you look, you can make, right now it's 18% margin there. Where if I buy 100 shares at $60 and I sell the $60 call, if the price stays at or above $60 between this time frame, then I will come home with 18.4%. Now there's always a little bit of a spread there, so just to call it even, let's do 18% even. Now that's 18% and my goal to make that in 1 year, okay? And so that will be the likely option that I take. If not, I will likely take this. Well, if you look closely, I'll just tell you there's a 50, 55, and a $60 call available at the moment. Now the market's closed, so tomorrow these prices will adjust based off of what the stock price is tomorrow. But this one, for example, I could sell, I'm looking at the $50 call, the $55 call, the $60 call, 10, 13, 18% respectively. And the $50 call at 10% it's not too bad, because I could buy that. I really got to sell that 60 in case it just drops, because then I could scoop in like at a 50 and then scoop in another potential percentage. Maybe the 55 just to split the difference there at a 13%. And then I could try to scoop in, maybe invest another 6,000 and sell the weekly, and try to scoop that extra 5% out of that stock. Now, why do I say an extra 5%? 4% really, because of that 1% dividend. But my goal with every stock, remember there's 20, okay? So ideally you want to make 15% across the board. That's my goal, is to make 15%. So every single stock I treat almost like its own portfolio, meaning like, how do I make 15% off of this stock in 1 year? And that's what I'll be doing. So with Freeport McMoran, since this is the first time I'm going in on this stock, then I will likely go in. I don't know why, let's go ahead and lock in a 10% there at $50. That way, if there is a correction, I'm Gucci, because I can buy more and trade the weekly, and you can make 1% per week easy doing that, and still hedge your risk, or not be as risky. Or I could go even as low as like a $45 one, just to ensure a nice little 7 guy plus the 1% dividend, make it 8% for the year, and then make that extra 1% through the 8%, and then try to cop that extra 7 by trading those weeklies. That's a stretch for me, but I do like to be a little risk adverse when I enter into an option, versus when, like Hecla, I had been slowly adding in more 100 shares at a time. Hecla, the reason I have 700 shares is because I started buying it at $1,700, or $17 per share. And now it's at 25, right? So now $7 more, it gets more expensive. But in total, those 700 shares only make up 5% of my portfolio, less than 5. So I could buy another 100 shares, like I explained, that I will do tomorrow, or maybe I just might buy Freeport just to hedge that. Likely not. I'm definitely gonna go for the $25 Heckler call. But just in case I do that, because I'm already down to 15, it could drop by $10 and I still make a profit somehow, and it still pays a dividend. A small one, but does pay a dividend. And do that, and then slowly, just move on. Because, like, for example, let's look at one. Let's go with Riot, right? So I've been investing in Riot for a long time, and I haven't been able to get out of it. That's not one that I want in my portfolio anymore. Well, let's skip that one. Let's go with Nike. I want Nike in my portfolio, and even if I didn't at this point, I'm kind of stuck in it. And this is the perfect example of when a trade goes wrong, but I'm still making money off of it. And so what I mean by that is, so Nike, I bought it at probably $85 a share, then I bought it at $75 a share and $70 a share, just to show you, because I have three options there, 300 shares. My average cost is $76. And it's at $64 right now, just to show you. And right now it's exactly at 5% of my portfolio. So, and this is a situation where I might buy another extra 100 shares, which would bring it up to, what is that, to 1.5, probably 6.5% of my portfolio, right? So now I'm over a little bit, 1.5%, but also remember that I'm going to sell an option, which will reduce that cost basis. Even though it doesn't show it on my portfolio, I cashed in a little bit, which will help reduce that portfolio diversity percentage. But I gotta see, it's at $64 now. This gives me the opportunity to bring it back down still, and still earn a 3% dividend. Remember, all 300 of those shares, despite being out of the money, meaning like technically I predicted it wrong, I am still collecting dividends off of it, so I can hold it long term. And this one gives me the opportunity to buy 100 shares and then bring it all the way down to, let's just say, $50. That spread is, I do not like that spread there. But what is it called in stock? The spread difference? I don't think it's called spread. I think it's called something else. But anyways, let me know in the comments if you know what that's called. But I could sell the $55 call, and that spread is only $75. Oh, I can't. Slippage. It's called slippage. So $75 slippage there, and I could sell that and still make a nice little 7.7% there if, remember that slippage. So let's go with a flat 7% plus the 3% dividends. That's 10% I could make off of Nike, off of this trade this year. And you're probably like, well, you just said 15%. I also said 15%, but I'm making 20 to 30% off of Hecla, right? So that's how I can just kind of average those out. Why? Because Hecla is a much riskier stock. It's more volatile. I mean, well, just compare Nike to how long Nike's been around, what they do, compared to Hecla mining, where you can invest and explore in different mines, spend all your capital, and get nothing, right? In their case, I'm bullish on them because they found a mine, I can't think of the name of the mine at the moment, but they found it and they've been working on it, getting it set up, and they actually had a breakthrough. And so it's actually been working. It's actually producing now, and now they're focusing on productivity or efficiency, meaning like gaining more. Every time they go down to get the silver, they get more and more productive, meaning they're able to save more, produce more with the same amount. And that's huge. So think about the profits there. They also trade at like a one price earnings ratio of a 1. Like for example, I think like Google is probably like at a 50x, 400. I think Palantir is at like a 400 price earnings ratio price. It's absolutely insane. But that's just it, right? So I think this one has plenty of room to run. I always hedge, so for me, it's never about it going parabolic. Again, when I told you my alpha on the Hecla mining stock, my goal tomorrow is to make a 30%, right? That's it. yeah, guys, so I won't be on here too much longer, so make sure to like and subscribe while you're on. That way you guys can come in and see these stock plays before they actually happen, because this video will, by the time this video actually gets out, the stock has gone in a completely different direction, or it's at a completely different price, because right now something like Hecla is extremely volatile, and with everything going on in the world right now, there's just no telling what could happen. They could, like for example, Nike's dropped a lot because they had all of their stuff in China when all the tariffs happened. And so, you know, with everything happening, we could block our borders to China tomorrow, you know, so it's just no telling. Yes, I have surrendered to Christ. I am a Baptist Christian, technically been saved in that church. So yes, to answer your question. Anything else, guys, while we're here? Jesus Christ is Lord. Yeah, amen. What else we got? So since we got more people here, we'll go and show some other stock. Here's a sleeper. Okay, so this one is very dependable, doesn't pay the most in dividends or in not too volatile. But so 2% dividend here, 2.18 if we want to get specific. But Kroger, I love this grocery chain. I think they adopt with the newest technology extremely well. So as far as grocery chains go, and I like to, again, diversify my portfolio into different industries, that is my pick. And so that one's going to sell. So I actually sold the call last year and it stayed above 55 the entire time. So that was amazing. So I probably cleared maybe 10% there, no telling. I can probably get a good idea based off of what this year's is. Yeah, I would say probably around like 7% plus the 2% dividend, maybe 9% on Kroger. But it's just a healthy stock. This year, I have the opportunity again to sell the exact same call, $55 call for 7%. And there's no slippage there. So this is a good example of people know the price of Kroger. It's very dependable, so there's not as much volatility and there's no slippage. There's a $5 slippage there. So you might lose between $5 of what you could have made because of that, but it's $5 out of 1,100. And so that one will have some slippage there, but I like this one for the next year. And then if it keeps going up, I could probably sell the weekly on this one for the $60 one. And let's see if I sold it for next week, Friday, the $62 one. You can make 1.7% per week there. And if it drops out of the money, you just, boom, you sell it for the next year. And now you have 100 shares of Kroger is $60 a share or $62 a share. And then you have a call at 55. So as long as Kroger stays between those two price points, you are setting yourself up for an even bigger payout the next year when all the options expire. So you have to keep, if you want to follow my strategy, you have to keep a very long-term vision, and it's yearly, at least yearly. And I'm already thinking 2 years ahead. So meaning like I sell this option for the next year and it's out of the money. Well, I have to predict of where, if it is out of the money, how much do I think it could drop? And if it drops just a much, I don't care if it drops by a cent. If it goes at $61.99, you win huge because you get to keep the stock and you got to keep all the money from the option. Don't have to sell it. You don't incur short-term tax gains. And boom, now you can sell the year out for maximum gain, maximum premium, because you've already purchased a share there and reduced your cost basis by selling the first call option. Now you're about to sell the second one for even more profit. And keep in mind, you're still collecting a dividend. And the best part about this, which is something that you won't notice, because when you're trading, you're usually not thinking about this until it actually hits tax time. And when I sell my yearly options, I usually buy those shares and then sell it exactly 365 days or less, sometimes maybe like a couple of days less. And so I would incur a short-term tax gain, capital gains, because of less than a year before I bought it and sold it. Okay, and so this is huge because you're talking about a huge difference in tax. You're talking about between a 35% tax and I think after long-term capital gains between 50 and 20% tax. I mean, you're talking about 10% of your profit that you're going to have to, 15% of your profit that you're going to have to pay to the government. Versus if you hit this just the way that I'm telling you, then boom, now you have, now you save an extra 10 to 15% in tax gains. So your profits, boom, just boom, 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 keep them going. So these are things that people don't think about because people get so lost and caught up into the trading and this buy low, sell high, stuff like that. If you want to do this long term, you have to think long term. All right, guys, so yes, please make sure to like and subscribe. As AmFan just said, I got about 4 minutes left, so I'll open the floor for discussion. If anyone has anything they want to say, let me know, and I'll answer any questions you might have. Anybody going once, going twice? If not, I'm going to look at another stock if no one tells me anything to look at. All right. So I do want to talk about one that doesn't quite fit my portfolio, and this one might be the one that goes. So early on, I had bought a lot of Robinhood shares, and Robinhood doesn't pay a dividend, and it's gone parabolic in the last year. I mean, we're talking about 154%, which is awesome. I bought them at $48 a share, and I've been trading them ever since. This huge, because it jumped up so fast in 1 year, technically I missed out on a lot of gains, maybe $20,000 to $30,000 that I could have made on these stocks if I would have just held them long. However, that's what I've got my long-term portfolio for, and I keep my long-term portfolio on M1 Finance. And it's incredible. So look at this. This is actually also starting to go parabolic, because the more money you have in here, the faster it grows. But I have around 450 stocks here that I keep, and Robinhood is one of them, including like Palantir and all these. So it's just a fantastic portfolio. Let's see what I've made in this year alone. Robinhood, there it is. It's 2% of 8% of this portfolio. So that sucks. I only have $100 worth of Robinhood in this portfolio. That's horrible, and that's crazy, right? Because it's a $100,000 portfolio, and I only have $100 worth of Robinhood. Just to show you the diversity of this portfolio. This is designed to only go up. This is your long term. This is how you retire. So it's just dollar cost averaging in. What I do is I just changed the metrics, I believe, to now I put in either $200 a week into this stock, into this dollar cost average portfolio. $200 a week. Think about that. Buying a piece of the market when it's good, when it's bad, whatever. And then I have it set to, it pays around a 2.83% dividend, right? And if you pay attention to the portfolio, then you see that you're starting to collect dividends on the daily. When you own all these different shares, dividends are always coming in, and the portfolio is set to buy more. So your dividends are constantly buying as well. So your portfolio grows, you make more in dividends, you buy more stock at different periods of the time, and it just continues to compound. And just to show you, like, I'll show you this chart so you can see exactly how this portfolio is done since I opened it in 2018. And just look at that, like, you know, and if you look closely and you look at the little gap here where all of a sudden it took a little small dip and then went right back up, that was COVID. I believe that was the COVID times. And so since it just kept buying, it didn't look, and just kept going and going and growing and growing, then those are some of the best times. It's kind of crazy to think about that those times where I was freaking out and it just kept buying and I stuck to it were the absolute most profitable times, because I was buying when the market was at an all-time low and only putting in $100, $200 a week. Think about if you were buying, if Robinhood was $100 a share at that time, you were only able to buy with $100 one share at a time. But then all of a sudden the market does whatever during COVID and it drops. I mean, there were some stocks 50%. Delta, I was buying for like $24 a share, maybe even lower. You know, now it's almost 70. But you know, for Robinhood, it drops to $50 a share. Now I'm buying 2 shares with the same amount every week. And then all of a sudden it all fixes itself, everything turns out well, and now Robinhood has doubled, tripled, 154% in value. So all of those shares also did that. So always dollar cost average. If you don't want to trade, you don't want to do the option thing, you just want to learn how to invest long term, set up a long-term portfolio where you put in money daily, weekly, bi-weekly, monthly. Just set it and forget it. And it constantly buys shares and shares that you've set up that you feel comfortable buying. You know, you could buy the SPY, just SPY, buy the index fund, and just invest in that. And you're buying almost the entire market there, top 500 companies. You know? So guys, if you haven't already, make sure to hit that like and subscribe button. Subscribe mainly, so that way you guys can stay in tune. I want to start doing this more, but my times are sporadic. I don't know when I want to get on. This is it's pretty hard to do. I mean, you kind of have to get into that mental, like, hey, I want to get on here and talk, which is, it's pretty difficult sometimes. Sometimes I'm just exhausted. Like right now, I'm honestly exhausted, but I got to stick to my goals for the year. Want to get to 1,000 subs, so this is how I've been able to do it. So I'm going to keep going daily, hopefully, and hopefully you guys continue to join me on this journey. And road to riches, man. Like I said, right now I'm focused on stocks because that's like been the big thing. Once I get past it and invest all these yearlies, I'll probably get back to all this storage stuff. I'm almost done with all these returns, which is huge for here. Get all these returns, get them all set on Amazon e-commerce, because we have a bunch of e-commerce brands that we are pushing and selling as well. As you saw my stock portfolios, where I'm going to be giving out stock picks and what I'm investing in, those types of things. What's going on with the government? What's going on in the markets internationally? All of this relates to my e-commerce, because these tariffs crushed some of my sales. And then the stocks are obviously going to be impacted, and then crypto right now. So when I first started, that was when crypto was huge. So I was really focused on crypto, Jose, and then now it's just not as pretty. My portfolio, I have my Coinbase portfolio that at one point was at 30 something thousand. Now it's at like 16. I think it came back up to like 22% or 22,000 or something like that. Might be at 20, but it's just not as pretty and sexy right now, so I haven't talked about it as much. I do want to get back into it, because despite what it's doing, it's still one of my favorite markets, and it hasn't slowed down. If you guys that are joining me for the crypto, you guys know that there are more transactions than ever happening. There's more money still going into that sector, and they are increasing efficiency and productivity within the blockchain space. Just because the money's not there right now and it's all moved into AI, does not mean when this AI bubble, if it is, I don't think it is, but when all the money's here and it's not so popular, or somehow they revolutionize bringing AI agents onto blockchain to solidify which agent does what, just give them a blockchain number so they can know to pay taxes if they go to work, etc., etc. That will likely be done on the blockchain. So be ready for that next super cycle where just this goes parabolic again. And again, I've been buying, I have my portfolio set to, one, I have a bunch of crypto already from previous years that I continue to accumulate. I've got tons in decentralized networks where they're paying me right now probably like 100% interest on some of these tokens. But I also dollar cost average into some of the big ones that I believe that are legitimate companies and legitimate assets, like Bitcoin. Where I dollar cost average there into like $50 a week. You know, it's not a lot. It's a very risky asset, if you want to call it that. I believe in it, but I've already invested thousands and thousands of it into it. So, and I'm already collecting. At one point, the portfolio was worth $70,000 to $100,000, and like now it's like at 20 to 30. So, hodl, not selling. Keeping it all, accruing, putting it into DeFi networks, getting interest, and crazy interest. So like I won't, like there's like 2 tokens in particular that if I get 5 likes here, I'll tell you which ones they are, but still make sure to subscribe, Jose. But I have 2 crypto tokens on the ZK Sync blockchain that I want to accumulate 1 million tokens. I can very easily see either, if not both, of these tokens go up to 1 cent, and that's crazy, right? So I think I can get 1 million tokens of some of these for maybe $300 to $500, right? Now, all my liquidity is all tied up. So even that within these blockchain spaces is a lot of money. And and I'm getting it in interest on both of these. So I'm just accumulating. Once it gets to 1 million each, then I'll start selling those tokens, the excess, not the million, keeping those till they go to 1 cent. There's one that I believe will go to 10 cents, but that's for a different time. Not mentioning that one yet. Don't want to jinx it. But once I get to 1 million, leave it there and then sell the excess to then put it in USDC or probably USDC. It's time. Right now, it's a stable coin that's paying a good interest. You can bring it on Coinbase onto their lending platform and make 5.6% interest. Not fantastic, but not terrible either. Yeah, so that's just not terrible. So yeah, and that's it. All right, guys, I went way past the 30-minute mark. So love you guys. Hope you liked and subscribed. I will see you tomorrow.